Hi, this is Linda from Real Estate One right here on Main Street in downtown Rochester. Welcome to our table talk. And I have Joe Beagleman here. Joe's from John Adams Mortgage Company. You might have met him before. Hi, Joe.
Hi, Linda. It's great to see you again.
Oh, you too. You've been so busy.
Yeah, these interest rates, they were so low over the last couple of years with all the refinancing and the big boom in the market. It's been busy times, that's for sure.
And good times, actually. A lot of people were able to get a home that maybe perhaps didn't think that they could go as high as they did to get a lovely home out there. Let's talk about the impact from the Federal Reserve. I think that's on a lot of people's minds today and how that's going to affect buying power and the housing market.
Yeah, let's talk about interest rates and what's happened with them and why it's happened. So,
Yes.
Over the last couple of years in this big boom that we've had with rates being so low, the rates were so low to create stimulus. And the Federal Reserve was doing a really good job of keeping those rates low. And they kept them low with keeping the federal funds rate really low and also buying tons of mortgage-backed securities, mortgage bonds. And as they purchased those, they really kept the market rates low and created a lot of stimulus for the market. What's happening now is they've actually, with so much stimulus in the market, so much money in the market, there's been really a lack of supply and the supply chain issues and some global unrest. There's been a lot of things that have contributed to high inflation numbers. And high inflation is a killer to interest rates because if you have inflation at 7 or 8 or 8.5% and you're loaning money at 3% over 15 or 30 years, that difference in spread would really affect the banking system because you'd lose money on the money. So one of the only tactical pieces that the Federal Reserve has to combat inflation would be increasing the federal funds rate. And when they increase the federal funds rate, they make money more expensive. So they're taking money off the table. What they've also done is slow down their purchasing of mortgage bonds and mortgage-backed securities and pumping money into the market. Both of those things and some of the global unrest and different things going on in the world has actually caused interest rates to go up a little bit. And we've seen them go up probably at the fastest pace I've ever seen in my career. And I've been doing this for going on 24 years. But the rates are now at probably a 12-year high. So what does that mean? Well, the Federal Reserve has said that, or it's projected, that they're going to raise rates another 6 times this year. They're going to raise that federal funds rate another 6 times. That's not a direct correlation to mortgage interest rates, though. What that does is it is a direct correlation to the prime rate, which affects our home equity lines. It could affect some credit cards, the money at which banks borrow from the Federal Reserve overnight is the federal funds rate. So it's going to make money more expensive. Actually, what the Federal Reserve is doing, increasing the federal fund rate, actually could lower mortgage interest rates in the long term because it could get inflation under control. So as they pull money out of the market, it's projected that within the next year, inflation could drop to 4.4% instead of what it was last month at 8.5%. In 2 years, it could be at 2.4% is what Goldman Sachs is projecting. And what that does is the Federal Reserve's target for inflation is under 2%. So they're trying to pull money out of the market, keep that inflation number low. Now, sometimes the Federal Reserve overshoots what they're trying to do. Actually, most of the time they do that. They increase that rate so much that it actually could put the market into a little bit of a recession. So that's a lot of the talk right now. Are we going into a recession? And what does that mean for real estate? Because we're talking real estate right now. Well, interestingly enough, in most recessions, interest rates come down. So if you're buying a house now and you're buying a house at 5.4% or 5%, national average for 30-year fixes in the low 5s right now, our rates are always lower than the national average. If you buy a house now at that type of rate, if we do go into a recession, you can refinance and hopefully get a lower interest rate on that money, which is great. Now you're thinking, all right, well, what happens with property values in a recession? We've seen property values go up so much. Interestingly enough, there's only been 2 recessions in the history of our country that values have dropped in nationwide. One being the savings and loan crisis in the 80s caused by banking, and the other being in 2008 caused by financing of mortgages. All of those, subprime mortgages and, the whole mess with the credit default swaps and everything that we've experienced personally, 2008, 9, 10, was caused by the real estate market. Those are the only 2 markets where the real estate values have actually dropped in a recession nationwide. Every other recession, the values have actually gone up in a recession because those rates drop. So I think that comes to probably what your next question is. What are buyers looking at right now, right? They're out there, they got to buy, they got to move up, they got maybe kids, marriage, divorce, whatever the reason is for buying a house. You buy the house that you want, you get your offer accepted. Hopefully you refinance in a year, and hopefully maybe this market gets a little balanced where things don't go out of control with buying above a list price, like we're seeing a lot of our transactions lately. Hopefully there's some type of balance in the future, but I don't think people should be scared about buying now because the interest rates are a little higher. Whereas if they waited a year and interest rates are a little less, values could still be higher in a year from now. So, I think they have to really take into consideration where the market is now. If they find the house they want, buy it. And we're still in a housing boom, Linda. As you know, there's more people wanting to buy than what the inventory is out there.
That's true. And although I'm really seeing for our team this last week, we have listed more homes in the last week than we have seen in a long time in all areas. So I really want to encourage them that there are a lot of homes coming on the market still. So always reach out to us to find out what that new list is looking at. What other things do you think maybe that they could take advantage of during this movement on the interest rates right now, to maybe if they're not prepared for a loan?
Yeah.
I know that you're really good at speaking with them and getting them prepared, and maybe suggesting some of the things that they do to make their credit status better.
Yeah, I think it's really important to get that pre-approval done up front, and we're pushing everybody to get a full approval where they get us all their documents in advance. As rates have gone up, you want to make sure that you are still approved for the amount that you are, because your buying power is less as the rates go up. So making sure that everything is under control before you start that buying process, because when you do find something, as you know, with the inventory low, you need to be able to make a move quickly. You need to be ready to go. If you do have credit issues, you need to work on those in advance, and we do that. We really just prepare people in advance for what they're going to experience in the market, so it's an easier process for them.
Yeah, and having a great pre-approval checked again and having that ready, it really puts you in line for that house as we package them up to go against perhaps competing bids. So Joe is El Genius in my book as far as the mortgage guy goes. And tell me your title, Joe, and a little bit about your background.
Yeah, and you for real estate, Linda.
Yeah, thank you.
Joe Beagleman, I'm a mortgage loan consultant. I've been in the business for going on 24 years. Thankfully, become one of the top producers in the state and the country. I was number 8 in the state in total production last year, and top, I think, 280 in the country. So really thankful for all the support. Have a ton of experience in all levels for all clients, from a first-time home buyer to our most well-qualified buyer, and really everybody in between. I love helping people. I love learning about their situation and finding a program that's right for them.
And I just love his directness too, because you can, it's a play on the word, but you can take it to the bank when Joe tells you something, whether it's not what you want to hear or it's something you do want to hear. When I, as a real estate agent, get a qualification letter from Joe Beagleman, I know it's good. So I really thank you for your service for the last several years. We won't mention how many, but it's been good, Joe. And I look forward to doing a lot of work with you. And again, tell them one more time what the number is if they want to have you answer some questions or take an application from you.
You can call me anytime at 248-302-3652.
And that's all except for dinner hour, right?
That's right. Yep.
I always remind him that.
Yeah, when I'm with the family or with the kids, you might get my voicemail, but I'll get right back to you after.
And usually that's not very long. It used to be story hour, but now that they've grown a little bigger, I don't know. Now it's dinner time, right?
That's right.
So Joe's got a wonderful family, and we're real proud of Joe.
Thank you.
Again, I recommend him highly as a loan officer. And also, Joe, we talked before too. You can do financing in Florida now.
I sure can. Yep.
Yeah.
Yep. If you get too cold and you want to move to Florida or want a second home or investment property, I'll be there for you too.
Yeah, it's good information. He knows Florida. So, all right, everybody, thank you. I'll see you next Tuesday on our Table Talk and podcast. Love having you here. And if there's information you'd like us to talk about, always just private message me. We'll be right on it. Thanks. See you later. Bye.